back to our special show, the Axis Capital View. I've been speaking with Dharmesh, Anirban and Nandan Chakraborty, the top three of the Axis Capital team. Well, clearly legislative reforms could take some doing because now you have to reach out for a parliamentary consensus. We don't have such a good record so far. Do you think there is more to wane in terms of, market levels before the market starts buying? I mean, the market may want to buy the transformation idea, but it may believe that there is more fall to come. Is it 7,500? Can it go even below, you think, Dharmesh?
I always tell investors, no pain, no gain. So obviously you have to take some pain on your chin saying, in case the market's correct. It's not only with India. Something happens in US, they pull out liquidity from the system and people start going in again back to dollar. You're going to see this volatile environment. So unless and until you don't have that money and the position to hold on to your stock investments, you better not be in market. It's not like a one-way ride. A lot of issues which will keep on coming.
But nevertheless will pin you down. How much do you think the market can lose weight?
I've said, nobody knows the percentage, but I think the downside-upside ratio, I think risk to reward is in your favor. I think so it's in one of the best situations today, where your risk can be anywhere between 5 to 10%, but your rewards can be any much higher than 20, 30, 40%. And there is, I'm talking as an index, but on individual stocks, the returns can be as high as 100% on good, decent investments. What is in the last 2 to 3 years, a lot of large caps have given you multi-bagger returns. Look at Maruti before 1 year. Or you can look at a lot of private sector banks before 1 year. So if you want to make that kind of returns, obviously there is going to be some risk. And any opportunity which comes because of global environment and all, one should use to buy into that.
No, Dharmesh, why I'm asking you this is that it is possible that emerging markets are going to be shunned for another, 1 quarter perhaps, or even longer. So even without that FII money, this year has been a record in terms of the absence of FII money. Will we still be able to make market gains? Are you that confident that the DII money will be strong enough?
Well, I'm very confident that India will keep on making money for investors. Don't forget that last 1 year was huge expectation. That's why you didn't see market performing. And as I said, the commodity stocks were weighing on the indexes. But for this year, the expectation is low. The elections are out of the way. The government has already announced huge reforms. If few of them implement, not all of them, itself is good enough for this economy to grow higher. If you didn't have corporates in the situation which we are in, all the large infrastructure and power, India would have been the hottest destination in the world.
Absolutely.
That's why you're actually getting an opportunity with these problems to make money.
Let me touch on the power reforms. I don't see any specific reference to power, though you have some people coming in for infrastructure itself. Is that going to be transformational, you think, Nandan? Will it succeed where 2003 and 2013 did not?
See, two things. One is we are more bullish on power T&D for now.
Yes.
Okay? So except for the fact that if there's a huge overhang somewhere, that's a different matter. But otherwise, power T&D, I think, is like an eyes closed thing. As far as power generation is concerned, it may take a little time because at the end of the day, it depends on how each state implements it. And that still is an open question. But in general, I'll tell you the ones that I think I'm bullish on. One is all the rate sensitives because of credit growth, which includes auto as well as banking. Second will be oil marketing companies. Third will be EPC companies, infra and EPC those. Then power T&D that I mentioned. Then pharma, what is happening is a few companies are now getting more and more hassled by the US FDA. So you are getting a few which are left. So I think a lot of money is concentrating in those, and there are good bets there in those. Finally, cement, more of the South Indian cement.
But did you buy, just to get the pharma, I'll come to the cement in a bit, the pharma companies that are in distress, are the opportunities to buy?
Depends on pricing and time frame.
Okay. Dharmesh, anything your colleagues left out in terms of what should be on the investors' radar in 2016?
I think so the investor has to take some risk. That's evident because of global choppiness. But if he's able to take that risk, because we don't believe the market is going to collapse in a big way. So you've got a very limited downside. And his vision is for 1 or 2 years. I think so India is the best place you can be, especially equities. So I very strongly recommend people should go via mutual funds, not try to act over smart and go directly because it's a tough market, tough environment. The mutual funds are much better much better equipped to go through this volatility phase. And SIP is the most safest thing. And as you've seen last year, we don't need foreign money. There's enough India money which is out there. So imagine if this money doubles or triples going forward. Don't forget when mutual funds will start distributing on the technology platform. So the reach is going to go everywhere. I think so the bigger game and the bigger theme for the country is how are you going to get everybody inside this whole economy, which has stayed out for so many years. And obviously young India, there's nothing better than India is in the global map today.
It's a great, yes.
I'm trying to add one sentence, which is FY16 to FY17, the EPS growth is set to almost double.
Yeah.
You've given me the hope for 2016 and the hope for FY17. Nandan, Dharmesh, Anirban, thank you very much for joining me in this special show. Well, as you can see, even before the investor conference had started, the Axis Capital team very bullish on one, transformational themes. It's not going to be incremental growth, so they're going to try and point out transformational themes for the year to come. As well, quite solid on cyclical growth as well, expecting the EPS growth that has been elusive so far to come. And finally, the way in which investors should play the retail investor, the mutual fund way, because this is going to be a bottom-up stock-picking market. And so play it safe, play it with those who know what is fund management, who know what is stock picking. That's the message from the investor conference. Thank you very much, gentlemen, for joining.
Thank you. Thank you very much.